What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. I want to say happy Friday. I hope you're having a great day. In today's video, we're going to be covering the overall market and what just happened today. And we're also going to be talking about Sofi and why it is a great buy right now. There's big changes happening in the market right now. The jobs report just came out. It was absolutely stellar. Now the media, CNBC, is starting to run with that cyclical, value trade. Okay, so that's happening right now. So I'm going to tell you exactly what you should be doing inside of this market if you want to have, amazing gains, within the next year or two. And only if you feel this video gives you better insight on the overall market or the SoFi stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming out. You don't want to miss it. Let's get into the video. All right, guys, SoFi Technologies, a very solid day today, okay? 4% gain. The market was pretty rough on the growth stocks, as you can see right here with the NASDAQ. That went down about 0.4% today. And as you can see, the Dow and the S&P 500 had moderate gains along with the Russell 2000. But the NASDAQ is very heavy tech. And that's why you could see that pullback today. SoFi is still hovering around that 13 billion market cap. We know from research that SoFi is projected to do right around $1 billion in revenue. Price to sales on this growth stock is right around 13x. This is a very fast growing company, guys. We are talking near 60%, potentially this year and next year. 60% growth is very hard to find when you're talking about a valuation around 13x. And I'm going to show you exactly why, how expensive this overall market is right now and why you should avoid those expensive growth stocks that literally have the same growth as SoFi right now or less. Right here we have the global ranking. These are the largest companies in the world by market cap. So the first page is going to show you literally the top 100 companies in the world right now. And we want to see exactly what happened with the massive companies because we can see, what the big money is doing, once that jobs report came out. So what you're going to do is you're going to click right here. This is the negatives, the companies that sold off. We want to see what went up today. Boom, right away. This is exactly what CNBC has been talking about, okay? Wells Fargo, Bank of America, JP Morgan, Berkshire Hathaway, Citigroup, Morgan Stanley. Okay, boom. All of the banks, boom. You see the big money go straight into the banks. Why? They believe that the Fed is going to begin to start tapering, with their purchases and, eventually the interest rates are going to start coming up. And this is going to affect the high multiple growth stocks, okay? So what we want to do inside of this market is, of course, we don't want to just run to a safety, route. We don't want to go to that safety because these companies have not had the best performance over the last 5 years. And I'll show you that right now. Right here, I'm pulling up Wells Fargo, just looking at the last 3 years of performance. And we can see they had a 3% increase in revenue, a 2% increase in revenue, and a 22% decline, okay? So this company is growing right around a 2% rate right now if we get rid of, the pandemic with the coronavirus. So it's just not a high growth stock right now. And you can look at the company's performance the past 5 years, a 1% gain. I see no reason to go into these stocks. I just don't see massive upside potential over the next couple of years. Bank of America revenue the last 3 years, 10% increase back in 2018, decent, and then a 3% increase in 2018, 17% decline, with the pandemic. Citigroup, a 9% increase, 6% increase, and a 14% decline in 2020. So, these companies are all growing right around, a 3, 4, 5% rate. And that's why I believe these stocks have done absolutely nothing the past 5 years. Nobody wants to be in these banks that are losing market share very fast to these fintech companies. When I think of growth stocks, I just want to see how fast the company is growing regardless of the sector. Sectors can change. I want to see exactly how fast the company is growing, okay? So we're going to look at tons and tons of growth stocks just to show you how cheap SoFi really is right now. This is Cloudflare, okay? We just want to go off the price to sales, okay? Price to sales is a very easy fundamental tool to give you a great valuation to see if you're getting a great buy on that stock at the time of purchase. As you can see right here, price to sales ratio. If we look at Cloudflare, they're trading right around a 76x multiple, guys. I just went over the SoFi stock with you. This is trading at a 13x multiple. There's no reason to put your money in Cloudflare at a 76x multiple when SoFi is actually growing, faster than Cloudflare right now. Shopify, an absolute great company, okay? Totally different sector than Cloudflare. It's just a growth stock in general. Right here, we scroll down to the price to sales. We want to look at, 2021. Where are they at right now? Boom, 50x multiple, okay? The price to sales, very simple. The market cap divided by the 2021 revenue. So they're trading right around a 50x. Datadog, back to the, cloud sector. Technology is going to get you the highest multiple. Price to sales, we scroll over to right here, 61x multiple. These stocks are not cheap. With the high interest rate environment potentially coming, you definitely don't want to be buying these right now at these prices. Trade Desk, guys, Jim Cramer was literally just recommending this company on, his Mad Money show. It's an absolutely great company. If we scroll down to the price to sales, this stock has really been running. August, 45x multiple on the stock right now. Snapchat, guys, we know that this was underpriced because after that earnings report, Snapchat rose 25% on an earnings report. This is a massive company, over 100 billion market cap. If we scroll right down to the price to sales, go to August, the current price range, right around 34x multiple. This one is actually reasonable, guys. This is reasonable growth. Those other ones, we're talking 60, 50, 70. 34x multiple on Snapchat. Zoom, this isn't really cloud. This isn't really, e-commerce. This is just different business model, the stay at home, Zoom. We're going to take a look real quick. Price to sales. This one has pulled back massively from last year because we saw the huge FOMO in 2020 because this was the hottest stock out there, but it's still growing very, very fast. And right now it is trading at a 36x multiple, right in line with Snapchat. These are great buys in my personal opinion. Twilio, we'll scroll down. This is one of Jim Cramer's absolutely favorite companies. This is a high growth stock, but it is trading very reasonable, right around 26x multiple. So this is the cheapest out of all of the companies I just mentioned. So as you can see, this is what the growth sector is being priced at. And that's why all of these companies really sold off today. But on the other hand, SoFi went up, and that's what I'm telling you guys leading into earnings. This company is undervalued compared to other growth stocks growing just as fast or even slower. And guys, there's another thing that's been happening in this market the past 2 years, and Jim Cramer has also mentioned this, okay? So I disagree with a lot of things Jim Cramer says, but I also agree with some things he says because he's been in the game for like 50 years. And he's basically saying there is just too much supply out there. There's too many stocks. This is correct. Look at the annual IPOs for 2020 and 2021. Almost 1,200 IPOs have gone public into the market in literally 2 years. And if you look at the SPAC stocks, the same thing has happened as well, almost 400 for 2021 and almost 250 for 2020, guys. So guys, we're talking about close to 2,000 companies added onto the stock market. Another 2,000 that have just gone public, guys. This is absolutely insane. So guys, we're going to look at bar charts real quick. And as you can see, there's tons and tons of companies flying today, even though that there was tons and tons of red. But guys, you got to be very cautious of what's flying. I can tell you right now, these first four companies that are soaring, these companies are literally in the millions when we're talking market cap. These are, literally close to micro cap companies. These are highly volatile. I mean, I'm talking you could lose 50% of the company in literally the blink of an eye. So as you can see, all these stocks are usually priced under $10, 3, 4, 5, 3. And that's why they make these crazy moves like 26, 30, 40, 80% gains. So what you want to do is you want to get rid of all of those, small cap companies. I'm talking anything under a billion. This is not the time to be buying those in this market with interest rates rising. So we're going to get rid of those. And this is going to give you the more larger, solid companies. And right now, we can still see there was some decent moves. And I can tell you some of these companies are heavy weighted on Bitcoin. The Nine, Bit Digital, Marathon, Robinhood. Let's keep going a little bit. So guys, a lot of Bitcoin stocks are moving today, okay? And that's good. That's that hedge, when these rates start rising. So a lot of people are playing the hedge on Bitcoin. I think the best buy right now for Bitcoin, hands down, is Coinbase. They are like the market leader in, crypto. But if we scroll down just a little bit further, some of these undervalued plays I continue to talk about are going green just a little bit, okay? We have PaySafe plus 5% gain today and SoFi plus 4% gain, okay? These, in my opinion, are, market disruptors, PaySafe is going after that iGaming sports betting, and SoFi is going to tackle, the banking and the payment processing business. And these seem to be going up on a day when the market is really selling off and people are going back into financials. So that's what I'm talking about. What I'm trying to get at in this video is look for undervalued plays. All of those companies I have just mentioned for you are extremely expensive. In a market where, interest rates are flying, those stocks are not going to be necessarily flying because they're already so expensive. It's going to be harder for the companies to make money, with, all of these interest rates rising. And I know you saw a lot of green, but I mean, there was a lot of red today, guys. I mean, tons and tons of companies were getting smashed today. I mean, look at these. Massive sell-offs today. So I showed you at the beginning of the video how all of these banking companies, have not had any performance the last 3 years. We're talking maximum gains of like 4% revenue increases. Yes, they are large companies. They've been around for 100 years. That's just what the big money does. The CNBC, the hedge funds, they want to protect themselves. They'll take, 5% gains because they have millions and millions of customers. They want to be safe at all times. And they're doing a lot of trading, swapping back and forth, growth, cyclical, reopen, tech. I mean, they're all over the place, and they really do control the market because they have the most money. Retail only makes up 20% of the, market. But guys, SoFi is going after these companies, and we're gonna see that in their, earnings report. They're going after that 2 trillion opportunity. Citi, Bank of America, PayPal, MasterCard, JP Morgan, Visa. I just showed you 3 of the companies that are surging today: Citi, Bank of America, Wells Fargo. We just looked at the last 3 years of performance when, the market was doing absolutely wonderful for banking, and we're talking 4-5% gains in revenue, guys. I mean, those companies are pretty much, shot. Yes, I understand that their multiples are low. All of those companies we're looking at right now, all of those multiples are definitely under like 7, but there's a reason that they've been there for 5 years, guys. The multiples are low because there's no more growth. All those companies we mentioned have the high valuations because the growth is insane. So what I'm trying to say is you want to buy growth, but you want to buy growth at a reasonable price, okay? All of those companies I mentioned, I wouldn't touch besides maybe Snapchat and Twilio, a 30x and a 27x multiple. That's what I'm trying to get at, guys. You have to be careful of these growth stocks and what you're paying. There's tons and tons of companies I would love to own, guys. I would love to own Lemonade. I would love to own ChargePoint. They are just so expensive, guys. We're talking 40 to 50x multiple, and they just went public. They didn't really have the chance to prove themselves. So that's what I'm talking about, guys. There's tons of companies you might want to own, but I'm telling you guys, you have to be very cautious because the market is really expensive right now. And with close to 2,000 IPOs just getting added to the market, guys, you got to narrow it down to like 5 stocks to own, guys. So 2,000 brand new growth stock IPOs and SPACs, you got to narrow it down to 5, okay? And that's not easy in this market with so many, stocks. We're talking close to 5 to 6,000 companies right now. So guys, take a look at this little, update I did. Growth stocks, I consider 20 to 80% revenue growth per year. This is what you want to be buying. You want to be buying companies gaining market share, thriving in pandemic or thriving in reopening, lockdowns. It doesn't matter, okay? You want to find a company that thrives in all situations. Price to sales valuation, everyone should be doing this before they buy. Market cap divided by 2021 revenue. Forget the 2020 revenue, that's called trailing sales, and forget the 2022 revenue, that's forward sales, okay? We want the current valuation right now. None of that forward sales nonsense, none of that trailing. We want to know what these companies are priced at right now, okay? Snowflake, 80x, Cloudflare, 76x, Shopify, 50x, Datadog, 61, Trade Desk, 45. Lemonade is, I believe, 40x right now. Snapchat, 34, Zoom, 36, Okta, 35, Twilio, 26. All of these companies are growing at an amazing rate, guys. But what if I told you SoFi is growing faster than 90% of these stocks? The only company they're really not growing as fast as is maybe Snowflake and maybe Zoom, okay? So SoFi is priced right now at 13x. What that's telling me is this is cheaper than some of the most expensive growth stocks in the world and has massive upside potential for this year, guys. We're talking a triple in my opinion, guys. This could easily see, like a 36x multiple, and people could still run it up if the company's performance is stellar. So I'm telling you, buy now as much as you can, because people are going to be buying more of this stock when the word gets out, when they see the growth and they see it's growing faster than the entire growth stock market, tackling that banking and payment industry. And the number one reason why we have seen so many stocks, come back down on these earnings reports. I just went over, Fastly. I went over Uber, Etsy, and there was one more. I forgot what it was. Pinterest. So all those companies came down massively, almost 10 to 20%, because they did absolutely so good during the pandemic last year, and now they're losing users. Etsy users are slowing down. Pinterest users are going away. Skills users are going away because those companies are thriving in, a shutdown environment. SoFi thrives in any type of environment, okay? I'm very excited for these earnings reports, guys. We're going to see how they did. If they have a double beat in that magical word that we're always talking about, which is that guidance, if we get that magical G word, we're going to see this one moon, okay? There's already price targets around $30. If this company has blowout earnings, they could raise the price target, to 35, 40 if there's massive, massive growth. And the key is member growth. As you can see, the members are just accelerating, 1.2 million, 1.5, 1.7, on track to hit 3 million members, a 75% growth rate, that's absolutely crazy. And guys, this is very hard to find with these SPAC stocks. We're talking EBITDA positive this year, $27 million. Look at this. 2021, guys, $27 million in EBITDA, okay? I really hope you enjoyed this video, guys. A lot of things are happening. You just saw, the big money. CNBC is going into those, value trades, banking industry, because they're afraid of those interest rates rising. And I don't think you should necessarily do that. I think you should still be buying growth, but be buying growth at a very reasonable price. And I just showed you guys as much details and research as I could on a lot of these growth stocks and how they are priced. We're talking 3 to 8 times higher than SoFi's valuation right now. And that's why I love these SPAC stocks, because they give the retail investor an opportunity to get in at a good price range rather than that IPO route, which is sky high, the highest price valuation possible. So those, institutional and early time investors can cash out. Please drop me a comment. I'll love to reply to any comment you guys have. I'll answer any questions. And don't forget to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming. You don't want to miss it. And I hope you have a great day.